So thank you all for joining. So today what we're going to do is talk about some of the challenges around the financial close process, and not just the challenges, but we'll also talk a little bit about some of the solutions that we have to some of these challenges. So we'll really be focused on that. And today we have a panel of experts from Perficient really to talk about financial close and then some of the supporting activities around the close process and really just the financial process in general. My name is Matt Hopkins. I'm a CPA. I've been with Perficient now for going on 11 years. I work in our corporate performance management group and am happy to be here today. I'll go ahead and turn it over to Saju to introduce himself.
Good morning, good afternoon. My name is Saju Phillips. I'm a director here at Perficient. Been here about 9 years and I've had about 20 years overall experience with various CPM tools.
Thank you, Saju. Terry, could you introduce yourself, please?
Absolutely. Good afternoon, good morning, everyone. Depending on your time zone, my name is Terry Ledette. I'm a senior solution architect with Perficient. I've been working in this space for about 20 years. About 16 of those in consulting, and I've been with Perficient right over 1 year.
Thank you. Rupen, could you introduce yourself, please?
Absolutely. Good day, everyone. My name is Rupen Patel. I've been with Perficient for about 2 years. I have about 7 years of consulting experience across various CPM tools, and I was in industry before that. I'm happy to be here. I'm looking forward to this panel.
Thank you. So as we talk about some of the challenges around the financial close, I think really the primary one that we see at our clients is really closing those books, getting everything consolidated, translated, and then doing the external reporting. So Saju, can you tell us a little bit about what you've seen at some of your clients around the financial close and some of the challenges that they're seeing?
Sure, Matt. So when we start an implementation, when we're talking with accounting and finance and going through a month-end close, the very first thing we talk about is data and how that data integrates from their source systems or their Excel files, and then marrying it to their month-end close process. So with these CPM tools that we can leverage during our implementations, what we address is from the source, get the data from either a flat file or an ERP, and we walk through the process of getting the data from the source value to the target reporting value. And the speed of that execution adds time. So a lot of times month-end close could have a GL close 1, a GL close 2, a GL close 3, and how do we execute that the process? So with the tools that we have in place, what we do is have a workflow system built in, so where the controller or the administrator or the individual sub-controllers can go in and import their data. What we try to do to speed up the process is implement a close checklist, a task manager, and build in all of the logic necessary, where if you were doing it manually before, maybe in an Excel or some manual calculations, we build all of those processes within the system. So the first goal is from a technical standpoint, right? Get the data, map, translate, all of those things, and get a full consolidation done. But as you go through those processes, also layer in roll forward inputs, cash flow adjustments, journal entries, and we build that into the entire close schedule with various solutions that we can implement, and that can speed up the process. So the first challenge is data, and then the second challenge is timing, and we handle that through various activities that we can with the CPM tool that we use.
Understood. And I know with data, I've had a client in the past where they were actually using Excel to do their consolidations, and the primary reason why was because they had multiple source systems, different ERPs, some of which could not provide any type of an intercompany trading partner for eliminations. And so then they had to load that into Excel and then manually go through and try to match up those intercompany trading partners so they could eliminate. So can you walk us through how some of the new systems might take a best practices approach to address a situation like that?
Yeah, definitely, Matt. So during requirements and design, when we look at intercompany, what we try to look at is for those source values that you're trying to map to a partner in an Excel file, where is the commonality? Could we build a transformation process where, based upon the account string, or maybe if there's another dimension or department or any other attribute that we can leverage, we can derive the partner from the data? That's one approach. And another approach is we can bring in the balance to a certain intersection point and let the accounting team break out that data by partner. So that's more of a manual effort, but you're replacing your Excel system with now a centralized solution with a form where they can break out that data. So that's a couple of different approaches that we've implemented to get that trading partner developed.
Okay, understood. Well, and I know, and that was what we ended up doing as well, is that we took a lot of various inputs in from that particular customer that would help us derive what the intercompany trading partner should be. And so we were able to then create ICPs or intercompany trading partners so that we could then help them eliminate their data. And I guess, Saju, as we look at some of the other challenges around the close, you had mentioned the timing. Can you kind of walk me through some of the challenges with timing, especially with these global companies, and how we're able to help address that?
Sure. With timing, what we start off is from a business process on when are the systems ready for each location. I'll take a global company, for example. When are they ready to start their first trial balance load? And we build that into typically a task manager workflow, a checklist, and we'll have workday completions and due dates and reminders, all of those things built into the system. So at any time at corporate, you can check the status of when checklist activities have been done to help with the timing situation. And we know where we could do sub consolidations in certain parts of the globe, or when we're ready to do a full consolidation company wide. And with the checklist activity, we'll align each activity for each sub business unit, Asia Pacific, Europe, or what have you. And then you can easily check the status of that through Task Manager, through various reports that we can develop within the system. And so gone are the days where you have to now email, the statuses, or go check a SharePoint directory file, because you can manage that all within the system with solutions like with Task Manager and built-in workflow processes within the system.
Understood.
Mhm.
All right, and I know Rupen's going to talk a little bit, or I think Terry maybe, about the task manager portion of the closed process, and we'll get into that in a lower level here in
Mhm.
just a little bit. I guess, Saju, also as you look at security, a lot of companies, especially as they go global, they have different reporting entities that some cannot even see the other entity's data. Others, we would like to allow them to see it, but not necessarily transact on it. Can you kind of walk us through some of the challenges around security and how we're able to address that?
Sure. So with the CPM tools like OneStream, you can have multiple groups accessing different parts of the intersection points. And at a high level, it's a matrix model to different objects within the system. So for example, if an entity should only have access to his or her data, they're only supposed to see that. We can handle through the dimensionality and create groups within the system. And during design, we build a security model with the client. We identify the users in the groups, and you can get very granular down to even the account level if needed, if certain accounts should not be visible to certain users. So for example, restricted stock or something of that nature, that can be very restrictive. So we start with users and groups, and it's very flexible in regard that you let the groups manage the security versus down to the individual user, because users change over time, and we build in best practices in that model from a naming convention and how an administrator can go and easily update that security as well going forward. The biggest challenge is, having the right users in the group and the right objects, but having the discussion up front during your project helps it throughout the implementation. So when we get to user acceptance testing, it's seamless.
Understood. Well, and something else to think about, and I know we talked a little bit about Excel and how companies have leveraged it in the past. Excel at times can be everybody's favorite ERP or reporting tool.
Hmm.
Speaking of reporting, ultimately, at the end of the financial close, we need to generate reports to a variety of stakeholders.
Hmm.
And it can come in different formats. It can need to be something that's formatted and standardized, or something that needs to be just a one-off quick analysis. So can you
Sure.
walk us through some of those challenges and the tools that are available?
Absolutely. So there are production type of reports that you want to run, and typically everyone has the similar formats, balance sheet, income statement, and so on. So we leverage the tools, query capability, specifically within OneStream with Q views to present them in dashboards. So you have that initial production reporting layer. We build it into the workflow system, and then users can view it, all security being the same. And then we have all of the ad hoc analysis needed, or the form inputs needed for adjustments, kind of related to reporting, but all of those objects can be created centrally where users have access to the same data through Excel. Because as you mentioned, Matt, everybody loves Excel, right? And through the quick view functionality, through OneStream, you can access the same data, same security in an ad hoc format. And what I love about the tool is you can take existing standard reports that are a query and then analyze to that data into Excel and do further drill down capability. And then drill all the way back, if built during the project, back to the source system. So reporting and analytics is inherent within the system, both through queries that are available that you can put into PDF, put into dashboards, export to Excel, and create ad hoc reports. I mean, if there's a way you can get to the intersection point, it's available. And the fallback on the Excel piece, just to finish that off, is customers learn these CPM tools, especially the end users, through the Excel capability. The more they interact with it, the ease of reporting comes easier as they learn the tool for the users, especially if they're going from Excel to a CPM tool. It's the best way to learn it.
Got it. Understood. And I know one of the questions that was submitted in advance was around the data visualization, and you mentioned dashboards.
Mhm.
I know as some of the tools become more robust and have more capabilities in that area, a picture can be worth 1,000 words, and it doesn't require the heavy manipulation that we used to have to do in the past to take data and get it into that graphical format.
Mhm.
Now, some of these applications out of the box are getting to the point where you can build those very quickly and easily, and some even come pre-built. I
Mhm.
guess can you tell us about any experience you've had with that?
Sure, absolutely. On the dashboarding piece, there are some pre-built dashboards that we can leverage. There's guided reporting. There are the graphical natures you're talking about, advanced charting capability. Myself, I'm not an IT person. I came from a finance background. So from a dashboarding capability to create buttons and create charts with these tools, it's really powerful. And obviously the executives love that presentation format. The analysts love being able to go from a graphical nature and a chart and drill down to the data itself. So building those dashboards has been 99.5% in all projects. It's like a given. You're not having to go to a separate BI analytical layer like another tool, but it's all within the application as another added advantage.
Got it. All right. Well, and I know you and I have kind of monopolized this conversation. Terry, can you tell us a little bit about some of the challenges that people have with data and getting data integrated into the application, and how we can overcome those challenges?
Sure, absolutely. So preferred method with the modern platforms is essentially what we refer to as directly connecting, or essentially querying your source databases. That way an individual doesn't have to run a report, export the report to Excel or to a comma delimited file, and then do another process. So if we can essentially query your source system, whether that's through a SQL statement or an API or other methods that are available, that's the preferred method. That process can also then be automated. So if you wanted that to run, say, 3 times a day, morning, noon and evening, or you want it more frequently, then those processes become automated. But that same piece that we're automating, essentially, you have the option as the end user to then execute that on demand.
Yeah, that's a great point. And I see at a lot of my customers that there'll be times even during the month where they might want to do a preliminary load, or when they get 10 days out from the end of the month, they'll want to load data, just get those preliminary numbers. And then as we get closer, the schedule changes. And to your point, 3 times a day, I've seen 4 times a day. And that way they can get that data quickly, get it consolidated, and be able to view it. But then there's always someone who needs to see a last minute entry or something like that. So that being able to run it on demand is always useful as well. So,
Yeah.
Rupen, I'm sorry, go ahead, Terry.
I wanted to add one thing to that. Yes. On demand, and then kind of doing the pre-close. Essentially, one of the things you can do with these tools also is if you want to restrict the access to the data that's in, quote, pre-close from an actual perspective and not finalized to just a certain group of individuals, you can use security to essentially restrict, quote, I'll call it pre-close until that data is then finalized, so that individuals aren't seeing data before it's, quote, done from an accounting perspective.
Right. Great point. Great point. So, Rupen, what about from your side? What have you seen as far as challenges during the close process and how people are addressing those?
Sure. Sorry about that. Some challenges I've seen during the close process is the timing of things, where you have a disparate set of users, and they're doing different activities, and so the timing of that doesn't always line up. So your reconcilers need their data at a different point than maybe your financial reporting team or your tax team, and so choosing the correct CPM tool allows for that dynamic capabilities and making sure the data is available for the correct users at the correct point in time.
Understood. All right. Well, and then as we come kind of to a close on the financial close, no pun intended, really, I think that the tools that are available now allow us to do a lot more automation, kind of eliminate a lot of those manual and rote processes that people are having to do now. And then really, it allows people, and this was one of the pre-submitted questions as well, a faster close, what does that really do for us? And what that does is it allows people to focus on things other than performing closed data, manipulation or aggregation, and allows them to actually analyze that data. So another part of the financial process, and sometimes part of the close, and sometimes it comes a little bit later, is doing reconciliations. So account reconciliations can be a large time-consuming process that's done by the financial group during the month. I guess, Rupen, can you kind of walk us through some of the challenges you've seen as people try to do account reconciliations and how they're addressing those?
Sure thing, Matt. Yeah, the challenges come in 3 basic buckets. The first one is either your legacy account reconciliation process is, as Saja was saying, everyone loves Excel, so they're very much Excel-based doing the reconciliations. And there's a variety of issues that come along with that. I'll get to that just in a second. The other set of challenges can be they're using a system of record, but it's a different system of record than they're using to close their books. So you could have differences in the timing of the balances, or it requires 2 separate loads, which, anytime you're touching your data, you want to make sure you're doing it as few times as possible, if at all. You want it just to be completely automated, as Terry was suggesting. And the third major issue is it comes with a process disparity, where maybe because of a geographical situation or a different set of books in different parts of the company, the processes and procedures are quite different and vary. And so for reconciliations, you may have a materiality threshold in one region that you don't have in the other region, or you have a materiality threshold based on your corporate currency rather than your local currency, and that causes issues when you're taking into account your FX rates. Have they been loaded in the appropriate system if you're using 2 separate systems? So those are the 3 biggest issues that I've seen come across. The biggest one, of course, like Sajid was saying, is the manual process. And I've had two companies come to mind that I work with that they literally have wet signatures and they have to sellotape a copy of a screenshot of that closing balance onto the reconciliation itself. Now we're in a remote work environment now. That's not effective and not efficient anymore, even possible in many cases. So that the manual process, getting people off a manual process and into some kind of system of record, is the low-hanging fruit and the most bang for your buck.
Understood. And then with these distributed groups that we have now, as you indicated, a lot of us are working from home. How do we pass information? So I know sometimes there's approval processes, sometimes it just needs to be done and filed. So how do we pass these reconciliations and this different information back and forth?
It's a great question. Depending on the system you choose to do your account reconciliations, setting up proxies can be done in advance. So if you know someone's going to be on PTO, or in the case that's happening a lot right now, people take the day after their second vaccine dose off, and you know that in advance. So you can plan for these sorts of things. You don't have to wait and see like, oh, why is that reconciliation sitting on my manager's desk physically? Well, because it's not anymore. It's sitting in their inbox. It's sitting in a queue for them. So that's one way that it's become more efficient, particularly in this time in our careers, to make sure that we're not only just having a proxy set up in advance, but we're thinking about the structure of the proxies. Why is this person proxying for that person? Why isn't this other person proxying for a said person? Why does that reconciliation with that immaterial amount need to be approved at all, or need two approvers in some cases? So it allows you to really take a step back and really analyze, why am I reconciling a clearing account when all it does is net in, net out? So if the balance stays zero every month, we should set up an auto reconciliation rule for that. We shouldn't waste time right now, because time is so efficient. We're all working from home, parenting from home, trying to work out at home, trying to do all these things from home. Our time is limited now. So doing all these things to make sure that we're reconciling what's absolutely appropriate, and we're making sure we're automating as much as possible, not for the sake of automation, but for the sake of efficiency.
Understood. Well, and you mentioned auto reconciliation and how that can help us. So can you kind of walk through, the different types of accounts that we may want to look at doing an auto reconciliation on, how we set that up? Are there parameters for materiality? How can you do that?
Sure, yeah. Auto reconciliation is a really powerful tool. It's built into pretty much every account reconciliation tool I've been involved in, and I've used about 4 of them now. So auto reconciliation can be as simple as balance equals 0, auto reconcile, or it can be a very complex auto reconciliation or materiality threshold, where you say, if you're using one system that you're closing your books in, you're consolidating in, and the same system for your for your reconciliation, you can say, hey, go get the FX rate that you're using for my consolidations, pull that FX rate in, translate the balance into the currency, that my corporate currency, and then if it's under a materiality threshold, reconcile it. It's done. So you can get quite complex with your auto reconciliation, or quite rudimentary. It really just depends. People coming off an Excel-based process, clients coming off an Excel-based process, they hear auto reconciliation, they get very excited, because it is exciting. But let's just take a step back and do some of the more low-hanging fruit. Balance equals 0, activity equals 0. That's an auto reconciliation. Start there. Let's crawl before we walk before we run.
Understood. Well, and you mentioned something earlier that, as in some of these companies, and I think probably all of us have been to a client or two where the reconciliation process is very manual, and I too have had one where it's completely paper based, and they would go into their source system and do a screenshot and print it and then attach that to the paper, and then they had a little reconciliation form that they would manually complete. Can you talk a little bit about how you're able to get data from the source systems and how that can help automate this process to make it go smoother and faster?
Yeah, absolutely. Having the same source system where you're doing your you're doing your reconciliations and your consolidations is the absolute ideal approach because you're not loading your data in twice. You're not all the mappings you make, they're applied automatically both to your the trial balance you're reconciling to and your final externally reporting balance. So having one system for that helps the thing like you were just alluding to, having to attach the closing balance onto the reconciliation itself, having to physically attach that. It removes that level of documentation because it's already embedded in the system. You don't have to prove that is your closing balance or your trial balance when you're using the same system because it's coming from the same source data. It's known, it's inherent. It'd be like proving you're typing out your first name when you're typing in an email. That's just how the computer works. That's how the system works. So that's one way to really how automation drives out that level of those differences that can occur when doing manual reconciliation. The other big one is archiving. You don't have to have file cabinets upon file cabinets upon file cabinets storing your reconciliations from 5 years ago. You have terabytes of data or petabytes of data out there that you can just keep loading your stuff in. You don't have to purge your data physically every 5 to 7 years. It's out there, and not only that, your auditors don't have to bother your accounting managers and accounting directors when they want to go rifle through accounts. Your auditors can just go into the system themselves with the appropriate security permissions that Sajid was referring to, and really allow them to do their auditing themselves, both internal auditors and external auditors. And then beyond that, your executives, your CFOs, your controllers, they can dig into stuff without having to hunt down the low-level analysts that perform the reconciliation. They can make their comments in the system. All this stuff, all this manual intervention that is so inherent in all the manual processes very much are cleaned up when using the appropriate system of record.
Got it. Well, and so no more bankers boxes in the corner of the controller's office full of paper reconciliations or having to request something from the warehouse when the auditors come to town.
Precisely.
Okay. And then can you tell us a little bit about some of the challenges of reporting where we are in the reconciliation process and how that can be overcome? Because, as we have some of these distributed environments, especially now, we're all working from home, how can a controller or an accounting manager know where they are in the reconciliation process?
Yeah, that's a great question and very, very relevant right now, especially if someone's out on leave for on maternity leave or paternity leave. And someone else is their proxy. Well, they don't know the full set of accounts that they have just inherited. When you're in the office, it's a lot easier to walk over to that person's desk and grab the stack of paper off their desk and get going. But now, if you're using a system, you automatically know in real time. Oh, I had 65 reconciliations before Jane Doe left. Now that Jane Doe left, I now have 105 reconciliations. I can see exactly where they were left off by Jane Doe and what needs to get left to process to complete those reconciliations. That scorecard is very much part of every tool I've ever seen. There's that scorecard capability that not only shows the user where they are, but the managers can then see where is my group in their reconciliations. Oh, it's workday -1. We're closing tomorrow, and I have 10 reconciliations out. Let me click on that, and I will see exactly what 10 people I got to go hunt down right now. So from that perspective, the reporting and dashboarding makes it really easy. If you're using a single system of record, the best value add I've found is that if you're looking at your lead sheet or your 10Q or K, and your auditors or your executives say, hey, that balance doesn't look quite right. What exactly is that? If you set the dashboarding up correctly, you can drill down directly from a balance on your external reports to the reconciliation itself. And so it saves a lot of time, a lot of manual intervention in those types of cases. And if people are working in different time zones, if someone decides, hey, I'm going to work in the Bahamas for the next 5 months, they can be 5 o'clock in the morning, 4 o'clock in the morning, your time, but they can get all the information they need. It removes that time delay with manual intervention. So that's where dashboarding really comes into handy, letting people know what they're accountable for and letting people see the information when they need to see it.
Yeah, that's a very valid point that you bring up. Using workflow or automated notification It used to be, well, I send an email to somebody and now I need to wait for them to respond. I might have to ask a question. It's much easier to do using the actual application. So I guess, Terry, can you tell us in the area of account reconciliations, what are some of the challenges that you've seen?
So just moving from Excel to a system, right? You just have to get past that initial hurdle of education and training to get people comfortable with it's not on my desktop anymore. It's not on the file share anymore. Getting everyone just to adopt the system. And that really just comes down to change management and working in the culture of an organization to get there.
Understood. All right. And then Saju, how about from your side?
Yeah, I think the Terry hit it on the nail. Is with that change management piece is some training involved going from Excel to a system. Navigating the interface, be able to drill down and seeing the transactional data. And one thing I wanted to highlight that everyone was talking about, going from a paper system to a tool, is the ability, even though you might not need to put backup or that paper document anymore, but to be able to attach documents for supporting evidence in these tools is there, right? So, not having to, physically go to somebody's desk and especially if you're in the Bahamas, I'd love to be in the Bahamas right now on this call, but the ability to attach documents, those type of things, it's a valuable tool in the account reconciliations.
Understood. Well, and so we've talked about the importance of a good reconciliation process and tool, how some of these tools can help streamline it, be able to do auto reconciliations, directly import data from source systems, perform these auto reconciliations. And we talked some about the actual consolidation process or the period close process, loading data, consolidating, doing your topside journals, things like that. So one of the challenges that we've seen at a lot of clients is they've got now new processes or maybe even existing processes, and they're struggling trying to get everything scheduled and taken care of. And you guys have alluded to it earlier, talking about some type of a task manager or a close manager tool. Terry, can you kind of walk us through, as people do their period close process, and have all these tasks and to-dos, if you will, what are some of the challenges that people are seeing, even before COVID, for these distributed companies with people in different locations, and especially now during COVID, how are people managing all of these different tasks?
Sure. So let me just talk about one thing you asked and kind of break it into parts. So
Sure.
just like pre-COVID is relevant even to after COVID with everyone working remotely, right? Typically you would have, whether it's a global organization with, multiple offices across the globe, or even a smaller organization, right? Typically you end up with, in the controller's office, the whiteboard where you're writing, the controller is keeping track of tasks on a whiteboard. Or what I've seen at one client was, or multiple clients really, is something gets developed in SharePoint typically with a task list that people need to update, but that task list typically doesn't have security, it doesn't have some context, you don't have dependencies, those types of things. So with the modern solutions that you can deploy, essentially, Task Manager is one of the items that we've talked about, is essentially you can build in, whether it's that spreadsheet, that whiteboard, et cetera, you can build into Task Manager, essentially, the task that you have for your close process. And really, you can take that to the next level, is essentially not just that being a close process, but really, if you think of your close as continuous, right? Close never really stops, right? It's going to stop for a period, but it's going through the month. So you can really have, on day -5, I need to finish AP. One client, and I'm dating myself a little bit, but when I was back in industry, I knew from a data loading perspective, AP always closed on Thursday because we would quote, get more records on Friday morning's load than we got on Thursday. We knew AP. So if you looked at a P&L before those AP entries came in, revenue was great, right? Margin was awesome, but then AP came in and you were like, oh, we're back to reality type of situation. So you can really build that into a continuous process also.
Understood. And can you kind of walk us through some of the tools within a task manager? What type of tasks might be set up? How do they interrelate? And then how's that passed between different managers or people doing the close?
Sure. So what you're basically doing is, and you can deploy this solution to various groups in your organization, whether that's, right, if we think of departments or cost centers, depending on which term is applicable for your organization, those typically, are then rolled up to, let's say, a controller, and maybe you have multiple controllers who's now reporting to, say, a chief accounting officer or a CFO. All right. You can build into those tasks. First thing you can build in is dependencies, right? So we all, at least everyone who's familiar with general ledgers know you got to close the subledgers before you can actually close the ledger. So one task could be, again, I'll pick on AP, but we need to close the AP subledger and we need to close the AR subledger before we can actually move on to finishing and closing GL or general ledger. So that's one thing you can do, but you can also think of this as other tasks other than just per se what I need for the financial close. As you're transitioning from I'm closed my books in the ledger or my ledgers, depending on your circumstance, now I need to start my reporting, whether that's going to be my operational reporting or my financial reporting. Typically for financial reporting, there's data sources that aren't in that ledger, right? There's the headcount I need for reporting that I get from HR. That could be a task that before I run these reports, I need to have HR provide me a file. What you can also do inside of those tasks is provide instructions. So as staff changes, gets promoted, whatever the circumstance is, they have the ability to then select, essentially think of it as a Word document. They can click that and see, oh, I need to do this, here's how I do it.
That's a great point. And I've seen companies do that where it's for, say, even entry level or for a new employee in their inbox or in their task listing, they have the steps that they need to do, and it's all laid out there in front of them. So to your point, we don't have that list on the controller's whiteboard, and we don't have that little to-do list pinned to somebody's cubicle wall. Now they can just look in the application. And also with some of these applications, you have the ability to have those hot links where you can see what the task is. You do a click and it takes you to the actual web form or to the form that you need to be able to enter in data and do that task. So a huge time saver that I've seen. And so Saji, what else have you seen with close manager or task manager type solutions, challenges that these types of solutions have been able to meet?
Yeah, every part of the globe. We were doing an example earlier about a a global-wide company, right, with multiple business units. So you can set up Task Manager for each business unit to have different levels of granularity, where EMEA has, let's say, 50 tasks during close, but US has 100 tasks during close. So to Terry's point, you can standardize everything and put everything in an application, but then you can also customize to whatever business unit needs for whatever they're doing for their task, because EMEA could be on SAP and US could be on Oracle ERP, whatever source system is. And they have different subledgers to close, they have different steps to follow, customize it to each group. And security, since we were talking about security earlier, leverage the security groups and they'll have task manager responsibilities. There might be some commonality between the task manager group and the consolidation group where we could leverage some economies of scale when we build a security model, or it could be separate, right? But it's very customizable. And that's one of the solutions that have come out of Task Manager that address some of those challenges we talked earlier.
Understood. And I guess, Rupen, from what you've seen, customers that have challenges around managing that close process or managing the account reconciliation process that you told us about, how can these tools help address them?
I think the biggest way with regard to reconciliations, and this applies to other activities going on during the close, is you can have multiple lists. You can have your monthly task, your quarterly task, your annual task, or your one-off task. That happens every August or something random. You can have those types of different lists to manage things appropriately, and the frequency of things. And so you can triage better as well if time is limited because of a holiday schedule, something of that sort. You can manage your time better, knowing which are your high risk tasks, which are your low risk tasks, which are your high risk reconciliations, low risk, and go for the big hitters to make sure that stuff is all buttoned up first before you go to some of your more rudimentary tasks.
Right. Understood. Well, and similar to what we've talked about with some of these other applications with some dashboarding, I know you're able to go in and look for those items that are high risk, be able to see where your bottlenecks might be and focus on those areas. So instead of picking up the phone call or phone and calling somebody and saying, hey, where are we with this? Are you done with your journal entries? You can look in the system, see if they're done. If not, you can actually do something automated through the system, or of course a phone call or walking down the hall when possible is always very effective too. But by having the system capabilities, it makes it go a lot smoother. And Rupen, you brought up something that Terry mentioned as well, and that is it's not just for the close anymore, right? We can do it for anything, any type of a process where you need to have specific tasks, dependencies, goals, things like that. It's very useful. I had a client that actually set it up with their external auditors, and the external auditors would go in and create the task for the audit so that the accounting department knew what they needed to provide to the auditors. And so they could just put it in there. They could plan their weeks out, know what was coming, and there weren't any surprises coming from that side. So all good points. So really, we've talked about three main areas where we see a lot of challenges at our clients. Really, I think consolidations, data quality, the timing, things like that, where these new applications can be able to help us meet those needs. We talked a little bit about account reconciliations, how we can automate those integrations in an auto reconciliation process and provide tools for people to be able to do the reconciliations much faster, get those auto approvals, things like that. And then the task manager or close manager that will allow people to really manage what they have to do next and see where they are in that process. So even beyond that, around the close or the financial office, what are some of the logical next steps that we see? I know, Sajid, you talked a little bit about the data quality. I know the metadata or chart of account maintenance. I know a master data management plan can be useful. What are some of the other tools or applications that might help in this process?
For specifically month-end close, there's going to be monthly changes to the account structure or other dimensionality that you need to incorporate. So built into OneStream specifically in the workflow process is identifiers when a new account is added or a new member is added as it goes through the transformation process. So the user sees it right then and there within the workflow to be able to handle that metadata change. Now you can do a couple of different things to create a solution. You can map the member automatically or let the controller or the administrator map it manually to let it go through, or make it fail where you have to go change the metadata to your point, Matt, right? And automate that process where you're automating the metadata first and then going through so you don't have the data quality issue. And I know we're talking about month-end close, but if we look at the bigger picture, at the end state, when you're looking at the reporting package or whatever you're pushing out for management reporting, you're doing comparisons, between actual and prior year. A lot of times actual to budget and actual to forecast. And to Rupen's point, to have everything in one system for AR, for account recs, with the application, having the annual operating plan in the system, to create the budget, have the monthly reforecast and the rolling forecast that you're doing, adding that to Task Manager. So you're done with month-end close, and now how do we look at the big picture for the entirety of your data set, what you're trying to analyze? Add steps there to now go update your forecast based upon actuals. And a lot of customers who choose these CPM applications are typically looking at one phase, but then having FP&A, other groups involved in the overall project. We're looking at a platform here. We're not looking at specifically, hey, this tool is going to do this. So having that broader picture definitely helps when we go through design.
Got it. Understood. And then Rupin, what about from your side? Anything else that you can think of that would be complementary or to this process?
We've mentioned it a few times, but it doesn't hurt mentioning it again. It's kind of the broader point is when anytime you do an implementation like this or go through a phase, the big question, maybe not said out loud, but internally everyone's saying it, is so what? We did all this work, we brought all this data in, so what? What does this mean? And so having a robust reporting built on top of any one of these platforms is absolutely important, because then you can answer that so what. So down from the analysts, so what for them is, hey, you have a great scorecard in front of you for account recs or a task list now, and now your job is you can be a little more efficient. And the so what to the C-suite is like, hey, I just paid tens of hundreds of thousands of dollars for this implementation. What am I getting out of it? Well, you're getting much more refined data. So this understanding that the reporting needs are there at every level, and that's where the value add is. If you have a robust management comparative reporting capabilities, that really shows everyone, top to bottom, the change that has been affected by implementing any one of these platforms.
Gotcha. Yeah, in reporting, it's an interesting topic. Some of these consolidation systems, the ultimate goal is to get those consolidated financial results. And then sometimes management reporting can need other data as well. So within these platforms that we're talking about, corporate performance platforms, there are ways that we can not only have that financial reporting that we must have, and the ability actually to integrate with any system, say, be able to do Edgar reporting or other type XML type publishing. We can generate those reports, but then also we can have that management reporting kind of as a side type of reporting, either with another application or an extension of the application, taking that same financial data so that we really have that one version of the truth, that our financial results and our management reporting both agree. So that's been a big gap, I think, for some companies, in that they've got separate reporting systems and they never agree. There's always this reconciliation process, or just this wink, wink, nod, nod. We know that we're not exactly going to be perfect between our management and our true financial reporting. Mm-hmm. So Terry, anything else from your side that you've seen kind of the logical next step beyond what we've talked about today?
Absolutely. So one of the groups in an organization that typically no one thinks about in these implementations is tax. They have an important role in the organization, obviously, because taxes is something you have to do, right? It's mandated by governments, whether that's countries, cities, states, and they typically have a different need from a reporting perspective than whether that's consolidations or operations, because they're reporting on legal entities, and I'm speaking specifically U.S. kind of in the context of this, but they have different needs, but they also play a part in the close process when you get to your Q's in your case, because they typically provide a tax provisioning that needs to be calculated based upon your data. And so they just need to be brought to the table to find out what their needs are, so that can be built into the solution, whether that's part of a phase one or part of like maybe a phase 1A that happens immediately after.
Got it. All right. Very, very valid points. All logical next steps that are related to these challenges that we've talked about. I know we've got about 8 minutes left. I've got some questions that were sent in advance. A couple of these are very related. What is the average close cycle time for publicly traded companies? I know I looked a couple of years ago. Some of the top performers were right around 6.5 days. About 5 days. Average was about 6.5 days, and then some took about 10 days, and that's actual business days to close. So, some other questions that came in related to this, really, what is the benefit of being able to close faster, and why is speed such a consideration? And we mentioned it earlier, but it's that speed of getting things done so that your people can stop focusing on gathering data and reporting it and being able to spend time analyzing it.
Mm-hmm.
So having your controller, your analyst, people gathering data, spending time trying to figure out what the journal entries need to be, that's time that could be spent looking at the data, looking for trends, how to make things better. So I guess, guys, anything that you've seen at your clients that would kind of help support that?
Yeah, I've definitely seen it, especially for the clients that go from an Excel-based system to a CPM tool, because they're doing so much manual work and fixing formulas in an Excel workbook, where now the system is handling those changes. For clients that are going from another system, a CPM system to another, it's more about change management on using the tool versus the process, to your point, Matt.
Right. Understood.
Mm-hmm.
Okay. All right. And then I think another question that actually came in while we were talking earlier, it was, what about late entries, and is there a process or a tool to notify you when those come in? And there is, and I'm going to talk about a little bit about both. So it depends on the process of loading from your ERP system to a consolidation system, how often you run those. And we talked about how you can automate those or run them as one-offs. So typically we have a close where we say, close process where subledgers are done, general ledger is done, final transmission from GL to a consolidation system. At that point, you stop your automated loads. So if you need, or if you know that you need to do it, then you can open up the system and do that one-off load that we talked about. Now, how do you know to do that? Well, either someone can notify your administrator so that you do that, or with that close manager tool, you can have a task in there where you verify, are we complete? Are we ready to close and stop loading from the ERP systems?
Mm-hmm.
So part of it can be a procedural system. Part of it can also be automated, as long as they get that late entry in before you actually do your final load of the application. So sometimes you need people to raise their hand to do the process. Other times it can be automated. So these systems and applications within these consolidation systems, if there is a late entry in there, say a topside entry, or if data has changed, you are notified that you need to do a consolidation, and you can run that and then see your final numbers. So all types of options to address that particular problem.
Yeah, let me add something to that. What we've done in the past for a couple of clients is we basically built them a dashboard that queried the journal entries. And so then we showed them by day, they had essentially a prompt. They could basically pick the date, and they could see any journal entries for that day. So they always knew from day to day what changed as they're going through the close process.
Yeah, great point, Terry. Great. So we're close to the top of the hour. I think we've talked through several of the challenges that we've seen out there. As always, Perficient is here and ready to help talk to you about any close challenges or any other challenges you might have with corporate performance management, master data, planning, budgeting, tax reporting. We'd certainly love to talk to the folks on the phone. If you guys have any questions for us, please feel free to submit those afterwards, and we can respond via email or definitely do a call if you would like.